Good morning, traders. This is Juan Maldonado from the Elliott Wave Street, and it's a pleasure to start the week with some of our favorite Elliott Wave counts. You can read the full disclaimer on elliottwavestreet.com, and I'm getting ready to take a short trade on the euro-dollar. For me, it's important to teach how to trade using the live market. I don't know if you agree, but it's better to learn how to trade under the live markets rather than seeing tons of examples from the past. Of course, it's important when you are learning a new technique to check the price action, but there is a time that you need a mentor who can really teach you how to trade on the live market. So we are going to do that exercise today, and welcome to the Elliott Wave Street. So today I'm going to tell you what I'm planning on the euro-dollar for this week. However, you can sign up for our trial, the membership trial. I will tell you more at the end of the video in order to try our service. I do these analysis videos every day on all these markets for you on the membership. All right, so here is my plan. I'm getting ready to sell the euro. The target for the week is the previous low, 107.27. So I want to sell the euro, and I want to follow the leg down back to the previous low. All right? Now, the question is how? So soon I'm going to post in the members area for my clients the precise level. But the plan is to validate this reversal point over here. We have the shooting star. We have the hanging man. Oh, that's nice, huh? Which is telling that that's a resistance level. That's it. When you have candlestick patterns, that's the only thing you can tell, that you have resistance at those levels. So my plan is to sell around the 108.30 area. For details, trust me, you need to take the membership in order to get more details about the setup. But I'm going to sell the 108.30 and I'm going to take profits at the 107.30 area. Because once the euro makes a lower low, I want to start finding a buy trade. Oh, for example, look at this beautiful reversal pattern, the morning star. A 3-candle formation, and then the price started to go to the upside. So we are having here candles as well, pretty interesting candles. And you know what else? On the 4-hour chart, we have this kind of doji, almost a perfect doji on the 4-hour chart on the euro. Oh, this trade is so fantastic. I see the euro coming down to the previous low this week. Let's get ready. I'm going to check now the dollar index, but before we go into the details about the dollar, let me share with you an interesting analysis about the M2 curve. The M2 curve, first of all, let's start with the M1 if you're new to these macroeconomics. The M1 curve is where it's the amount of money in the market. So the bills, the US dollars that are in the market is the M1, and the M2, we're going to add M1 plus the deposits that we have in our banks, the savings, the checking accounts, were something that we can very easily convert into cash. So that's the M2. So the M2 is the money stock in the market, right? The amount of money. But look what happened on 2009, 2008 during the crisis. Yeah, the Fed print money. Then here, accelerate a little bit more. Look, the slope of this curve before was pretty steady, growing and steady because CPI, of course. But then the curve is continue growing, and that's good for the economy. But look what is going on right now. That is crazy. The amount of money that the Fed is printing and putting into the market. Wow. So you know what's the name of this thing? Supply. This is the supply of US dollars. So why we have a strong US dollar around the globe if supply is going up and the price is going up? So what is missing here in this equation? Oh yeah, demand. Demand is also going up. So if we have an increasing supply and increasing demand, the price is going up. So why the prices, why the demand is going up? Well, because we have worst things happening in other parts of the world, that even with a high expansive policy of the Fed and printing money and moving interest rates down, investors are seeing the US dollar as something safe to invest on, right? But what is going to happen then when everything calms down? Of course, the price of the dollar is going lower. But it's going to take a while. Now, let's now check the dollar index, the price of the dollar in terms of Elliott wave. So first of all, from the weekly chart or higher time frames perspective, I'm looking for a higher high before the drop. So I'm thinking that the dollar it's going to increase eventually the demand. Not yet. We're going to have first of all a leg down, and then we're going to have a move up, and that will be it. That's where the price of the dollar will start easing down. If we go to lower time frames now to check the internals, it seems that we need to have, first of all, before this drop over here, another move up back to the 101 area this week, maybe higher. Let's see how deep this B wave could be deeper. The B wave, I don't know that yet. It could go higher here. It's possible. But the key point is that it seems that we are seeing a bottom of the market on the dollar. So if it validates, and please listen carefully that word, if it validates, we are going to start seeing the strong US dollar today or this week, and we are going to have a nice drop on the euro dollar, and that's where I want to catch the trade. But we need to have the perfect timing and validation. So trust me, you should take our membership to receive the daily comments with Elliott Wave and have this additional point of view on your trading. Now, let's continue with the S&P. On the S&P, we know that the S&P is going up thanks to the Fed. The last 1-2 candles here during the drop. Look all the price action that we have here from 29.62 to 22.70 on 2 candles. Then during the move up, we have 1, 2, 3, 4, 5, 6 candles. So 6 versus 2. You can see that the effort in terms of time to move the S&P higher has been taking more time than with just 2 candles, the leg down. Are we going to have a V-type recovery here and the S&P will continue higher to 4,000 points? Or are we going to have a different type of pattern, maybe some sort of double bottom formation around here, a W pattern, and then the continuation? I think that this is more likely to happen because according to my Elliott wave analysis, this thing is corrective. The tricky part is when this thing is going to turn around. Here we're trading against the Fed because the Fed is putting all this money into the market, and that's causing this artificially made leg up. But we know that that is not the real value of the companies these days. Do you agree? We have people in their homes, everything shut down. So why the S&P is going up? Doesn't have any sense. Well, the reason is because the Fed is putting money into the market and that's causing a move up. Is going to be the Fed able to connect with the economy again once the health emergency eases down? Are they going to be able to connect this thing with the real economy and the S&P will continue higher? That's the big question. That's their plan, actually, right? Well, so we need to understand all these complex matters, but if we go to the lower time frames, in terms of the Elliott wave count, I think that the S&P is so close to find the top of the corrective wave. Look, I have the trend line over here, and the price tries to re-enter the bullish trend 1, 2, here 3 times, and is failing. But I still believe that the S&P could make a hard high before the drop. So, let's talk about the strategy. If the S&P breakouts this wave A with a nice red candle, that's a sell trade. All right? If the S&P goes higher here above the high, and I think that is going to continue trading below the trend line, goes here above the high and reverse, that's going to be the sell. All right? So one or the other. One or the other. And of course, in an alternative scenario, let's say that today they find the vaccine and it's going to be ready for all the people in the world in 24 hours, and they are going to your house, and they are going you're going to have the vaccine in less than 24 hours, and then you can start working again. Well, if that happens, we can see a nice green candle, for example, and then we are not going to sell it. Make sense? Makes sense, because the only way the S&P could go higher is if we see a real solution about this health emergency. On the other scenarios, the Fed is not going to be able to sustain this thing anymore, because they can't continue printing money, and they are going to lose all this money, right? Because this is like a trade that the Fed is doing. All right, traders, so please have a fantastic trading week. Now I want to invite you to take our Elliott Wave Street membership. Visit ElliottWaveStreet.com right now. Click on the membership tab, and then you will see this page with all the details about our membership, where you can pick Forex, a stock, or the full access. Here are the currencies, the stocks and ETFs, the futures that we cover on a daily basis. All right? So please have a great week, make some good money, and I'll see you inside the membership. Take care. Bye-bye.